Hey guys, it's Ricky Analog here, ready to do the Sunday prep. I hope you have all been having a great weekend, enjoying some time away from the screens. Now, before we go further, please subscribe to the YouTube channel, turn on the notifications, especially so you can keep up to date with new content we put out, such as Goose's Midweek Watch. Comes out Wednesday evening to prepare you guys for Thursday and Friday, and the dude has been on an absolute tear. And also, if you enjoy the free content we're putting out, just ever so gently, just massage that like button. Just give it a little tickle. Okay, that's enough, that's enough. Easy there, fella. Now, I've been noticing some follow through on earnings beats that have nice daily charts. We still have some big names to report, and we do still have a few weeks left of these earnings plays. Now, once that passes, you will start to see the small cap market probably heat back up, which is great for me because I trade large caps, small caps, and everything in between. And I know a lot of people might tell you, that's not smart. You should really focus on a single niche. Now, I would like to reply to those kinds of people by saying, I do focus on one thing and one thing very well, and that is understanding how stocks move. If you understand and truly study the way stocks move, you will realize you can trade everything, not just large caps, not just small caps, not just equities. Everything that is a trading vehicle has to move via a trend. So I urge you guys to learn that so that you can truly become self-sufficient. And once you do that, you can stop relying on people for ideas, which leads me into my next point. I've been seeing a lot of people that just aren't really taking responsibility for their trades. I don't put these Sunday preps out so that you guys can copy my ideas. That's not the point. My goal is to educate you in what I'm looking for so that you can learn to make your own preps. Because guess what? I don't just do a Sunday prep. I do a Monday prep, a Tuesday prep, a Wednesday prep. I prepare for every single day of the week. I just happen to put this one out so you guys can see what we have planned for the week ahead. And, you know, that is really going to help you further in the game because there's been this overarching theme of laziness in our culture where people actually prefer to be spoon-fed. And I'm telling you right now, if you think that you're going to just copy people's trade ideas and not have strong backgrounds in concepts such as risk management and position sizing and how to read what price is telling you, you are not going to have a long and successful career. In fact, you're going to maybe have some ups because obviously anybody can make money on a trade, but you won't be able to keep that money. So it's going to be a complete roller coaster ride full of pain. I highly urge you guys to learn how to trade for yourself. Fish. Learn to fish. Don't come out with your hands out looking for freebies. Take the information that we give you and learn to make it your own. I'm not saying that you shouldn't use these Sunday preps as a way to find ideas, but what you need to learn to do is make them your own, because there needs to be if-then statements formed for each and every idea and every single possibility or outcome or scenario, whatever you want to call it. And that is what's going to give you guys the longevity. So I just wanted to put that out there. And let's move on. Let's get right into it. And as always, let's take care of some housekeeping. The disclaimer. All right, neither I nor TrueTrader or any of its affiliates are licensed security broker dealers, nor licensed financial advisors, and anything I talk about today or in any content I ever put out is meant to be a solicitation to buy or sell a stock. It is simply my own opinions on what I see and how I may react to the market. Make sure you have your own plan. Make sure you understand that trading is risky business. Everything I talk about, guys, is for entertainment and informational purposes only. Let's go. All right, starting with the broader market, the ES right here, you can see we had a very strong week, pretty much just straight up. And I'm actually kind of hoping that we speed up into that 4,500 area. You got the quarterly pivot up there. If we can speed up early in the week, like Monday, if not the latest by Tuesday, I think we might get some good opportunities where other names start to look extended or there's weak names popping into resistance, and we're going to have some good short ops because when the market gets extended like that, you know at some point things just don't go straight up. They do need to have pullbacks. So that's what I'm hoping for. If that's not the case, we obviously have the 20-day. I'll be looking for retraces back to the 20-day, which is also the quarterly, and you know, that psychological 4,400 level, which is, you know, is that enough confluence for you? 3 different things all lined up, as well as, you know, we have that consolidation area from the recent tops. So pullbacks to that area is where I'll look for support to show up. And of course, if that doesn't hold, we still have that 43.65 area from last week, which also is pretty significant and should show support. All right, so now we got the NASDAQ here, the tech. It actually lagged in comparison to the S&P. While the S&P was kind of just straight up, this is obviously most of the week pulled back. Right into the 20-day, right into the 15,000 psychological level, right into your annual pivot. So no duh, it found support there. Great. Also have this little trend line. The only thing I have of note is that, you know, we have a monthly pivot just a little bit higher up in the 15.2 area, but above that is really not much for quite a while. So other than that, like for the downside, obvious support's going to be the 20-day, the annual, and the 15K, which have held last week. Underneath last week's lows, I might start to worry a little bit, but what I would actually look for to see if there's actually any reason to have legitimate worry is if we break last week's lows, afterwards, if we push back up and can't get back to reclaiming certain levels and start to like put in lower highs, then I might think things could get a little dicey, because at that point, you know, we would have a lower high on the daily chart and then a lower low confirmed by the break of last week's lows. But I think even with that, the weekly chart's still not going to look that bad. And at that point, it's not Chicken Little yet, right? So dips still get bought up. The trend's still intact. Let's see what the week brings us. Bitcoin continues to look extremely strong. We're now retesting the major breakdown area from back in, what was that, May? We've reclaimed the 200-day. We've reclaimed the weekly 20. We're continuing to see higher lows and higher highs on the daily chart. One of the things I did want to point out, guys, is talk all the shit you want on the crypto space. The one thing that cannot be denied is just how well these charts follow technical analysis and levels and the respect. Like, I mean, when you look at some of the way these levels hold, even on higher time frames, and you look at like the fib levels, everything is just almost to the T. So you gotta love that. So we'll see. Can the bulls make a push this week? Can we get back closer to the all-time highs? Or will we retest some areas and see if support holds? Stay tuned to find out. All right, so jumping into our sector analysis over here at barchart.com, into the stock market sectors. Gonna sort by the short-term matrix. Hopefully you guys are learning how to do this on your own by now. It's pretty simple. Again, I just like to take a look at what sectors had strength and what things were weak. The ones I noted down were basically the materials, consumer staples, and financial sectors all were pretty much the outperformers last week, and energy is back to being weak. The one thing I did want to make a note about was how the IT is really lagging, which explains why the NASDAQ kind of lagged the S&P last week. But what I want to see is, does money flow back into the tech sector this coming week and to follow, or do we see that it continues to underperform? That's going to be a key indicator moving forward. All right, now that we have that, it's on to our long setup. Strong stocks looking for continuation. eBay is the first one on my list. And look at that daily candle. I mean, that's a crazy strong day on Friday with great volume behind the move. I would love to see some weakness Monday morning off the open and a retrace kind of right back into this 72.50 area. And what I did note in the blog was, if you look at the intraday action from Friday, you can see this level constantly holding, right? So it's not only is it a nice monthly pivot right there, you also have the fact that it acknowledged it on Friday, right? So a nice little flush down to those levels on Friday or on Monday would give me the go ahead to look for support to show up and possibly scoop that up for a continuation. You can see on the daily chart we're flirting with 52-week highs. And like I made note in the earlier part of this prep, was we have seen some follow through on some earnings names. These guys, the earnings are out of the way, but this move started after earnings came out, right? If that level doesn't hold, the next level I put down was 70-ish, and you can see some, just draw these levels right here for you. It's pretty simple. This 70 area, right across, and that's going to be right around 61.8% retrace on the fib. So two different levels I'm looking for. We'll just call it 72.50 and 70. I like eBay for possible scoops on early weakness on Monday. Next on that list is Facebook, and Facebook is a classic setup I love to trade. All-time highs on a strong stock, pulling back to support the 20-day, making a little intermediate high here, pulling back, holding the 20-day again. So basically over this 360, let's just call it 366. Over 366 is the trigger, which should take us back to all-time highs. Now, if in this instance, I would probably look to join trend on the day it triggers. Obviously, I can be wrong and stop out. My risk management is going to keep me safe. If I get stopped out, this trade does not fall off my radar. It simply is a situation where later in the week, I just look for better prices and see if it still starts to hold some levels, because I love these daily setups. So that's the plan on Facebook. Moving on to the next, DoorDash earnings on Friday. They open really weak off the numbers and just boop, up, right? So it's a great daily candle, flirting with a breakout level on the daily chart. Not a lot of resistance until much further up, plus the psychological level at 200. I'd like the position prior to that. My goal is to get long on an early flush into this 187.60 area. And again, kind of like eBay, you see like plenty of price history in this area. So like lots of price history in this pocket. So a nice little flush to that early on is where I'm going to look to entertain the idea of scooping this for a possible long. Moving on to our oversold reversion setups. The only thing I have listed is VRM, and what I wrote down is it's not there yet, okay? What I'm looking for is if we can get some continued weakness and like a panic flush down to all-time lows, puts us right into this monthly and quarterly pivot, stack pivot area. If that level doesn't hold, I do have written down the next level being down this 22 to 23 area, because a lot of times, you'll see us break levels, flush further, and it's just people panicking out, right? So you don't have to be the first one in. You can look for higher lows, look for something to have defined risk off of. It's not like you need to catch the falling knife, but I do want to be prepared in case we speed up on this name. Again, it's not there yet, just keeping it on radar. All right, so that's all for the long setups. The next thing we look at is short setups, weak stocks I'm looking for continuation on. The first one is GRWG, and one thing I want to do with this name is not start on a daily chart. Let's take a look at this. Do you guys see this monthly chart? Classic setup, straight up pullback, and keep in mind this is a very high time frame. It's a monthly chart. But we totally got a lower high fall by a lower low with room down to the monthly 20 SMA. I really do feel like this is an important breakdown on this name. The sector's been weak. It would not surprise me to see this thing coming down to the 25 area. But the problem is, how do you trade it? Because you're technically not wrong about the idea or the thesis unless it were to go back and make all-time highs. Because basically what we're saying is that the high's been put in. So how can you be wrong about the high being put in until a new high gets put in, correct? Follow that logic? Okay, so how do you trade it? Because that risk reward is completely upside down, right? This looks, I'm just eyeballing it, looks to be about 1 to 6. You'd be risking 6 to make 1 type scenario. I'm glad you asked. So how do we trade this? Let's go to the daily. Throw those pivots back on there and let's see some things. All right, so what I have written down is pops back into the first spot is the monthly pivot at 33.50 area. Keep in mind the ATR is 3 points. So, I think that monthly pivot may be a bit too close. It is kind of a breakdown level from back in May. What I'd rather see is the bigger push back into the more recent breakdown level, which is the quarterly pivot there at 3560s. Keep in mind, this name has done this before where it breaks down and pushes up much further than you may kind of anticipate. So I am prepared to be wrong about this level. If I am wrong about this level, the next area is going to be the 20-day, 200, and the 50-day all kind of gathered there in that pocket. I find it very hard to believe if this thing were to push up into those levels, it's not going to find some serious resistance, at least for a while. Now, granted, I want to point out, if this doesn't hold that 3560 area, I don't think we go straight up to the next level that same day or even the next day. I feel like that's later in the week, possibly even next week. So I'm just going to keep it on radar unless it gives me the fade from the first spot that I'm talking, right? Like if it pops 3350 emotionally and I take that fade and it works, I may keep a piece on. If it pushes straight through there and doesn't give the fade from that level and I get the 3560s, I'll take my shot there. But remember, guys, risk management is what keeps you in this game. I'm not taking this at 33 and adding the whole way up to the 42 area with risk over 44. It's not going to work that way. You have to understand how to read price action, how to know when you're wrong, and take your paper cuts and be flat, no position at all when we go into those next levels, so that you can take it without emotion and without some unrealized P&L in the back of your head. So that's the plan on that. And keep in mind, if it starts to work right away, great. It very well may turn into a thing where I keep a piece on for the swing. And the last one on this section is POSH, which was an earnings breakdown from last week. I mean, the breakdown was kind of bound to happen with it knocking on that door, and the earnings were lackluster, right? My plan on this is just any kind of pop back into the 20-day quarterly pivot for me is going to be a fade. I don't know if it gives it. The way it traded on, well, after earnings and then last week after it, kind of makes me feel like it's rolling over lower. If that's the case, probably no trade here for me. I do want to see it try to push back up into the breakdown levels. All right, let's get into the overbought reversion setups. I have two names written down, and I want to be very clear, guys. So it's NUE and it's UPST. And I am not I'm not over the top excited for either of these. Neither of them are where I would take them yet. And in fact, I have written down on both names that retraces back to the breakout areas probably offer really great opportunities to get long the names. These are, look at the earnings volume and the breakouts that they've had. Actually, NUE was not earnings. This has just been such a strong name. The sector itself has been really strong. But granted, you can see a retrace back to this 112 to 113 level on that. Looks great for a possible scoop for a long. But I'm keeping them on radar just in case, because I feel like a lot of shorts are in these names because they think that they're overextended. They think it's overbought. And so we may get a squeeze on one or the other, if we're lucky, somehow both. But the squeeze has to make them look extreme. And one thing I want to point out to people is you can look at a daily chart and say, look, this is getting extended, right? Because look how far we are from the 20-day. And if you like go back in history, you'll see it doesn't really get that far away from the 20-day that often on either of these names, right? They get up there and then they pull back. They get up there and they pull back. But one thing to point out is if you look at the higher time frame intraday charts, they're holding trend. So as long as something holds trend like this, they can continue to go as high as they want. Don't think that something's overdone or extreme. If the intraday time frames are really holding and we're just slowly grinding higher, because what's really happening is shorts are just getting slow cooked. And so that's what I'm hoping for. I'm hoping the shorts get slow cooked. I'm hoping we squeeze out and maybe there's an opportunity in there. But if we don't, if this thing just wants to fade, guess what? I'm not going to catch the short, but I will scoop the longs on both these names as they come in. So I just want to be crystal clear. Neither of these names are shorts yet for me. In fact, both look great for longs. But if they squeeze out, if they do actually become extreme, then I'm going to get interested in the possible fade. Okay? Alright guys, that's it for me for this week. I know usually I give you guys my game plan for the earnings for the upcoming week. Moving forward, I'm not going to do that anymore. It's not that I'm not prepared for those names. In fact, I am. It's just a little too much work for me to put together the whole video and the blog post every single Sunday. And I want you guys to still prepare for these because they're big opportunities. But Ricky, how do we prepare for those? I'm glad you asked. Click the link below, guys. It's going to take you to a webinar. I did a webinar on how I prepare for earnings plays. So I'm going to give you guys the thought process that goes on behind it, what to look for, what grabs my attention, and then you can take that knowledge and you can start making your own plans. Now remember, that means one thing, and that is it's going to take work on your part, right? This isn't spoon feeding, but that's great. It's going to help build that discipline that it takes to be a great trader. So hopefully you guys found some value in this Sunday's prep. I hope to see you guys all at the market Monday morning ready to crush it. Cheers.